Xtalks connects professionals in the life science, medical device, and food industries with useful content like webinars, job openings, articles, and virtual meetings to help you succeed in your career. This food industry-focused podcast brings together some of our editorial staff to share insights into the latest B2B industry news to help keep you up to date. This week on the show, we're discussing PepsiCo making a strategic investment as the Instacart IPO draws near, and Smucker's $5.6 billion acquisition of Hostess. Enjoy the show.
Hello, everyone, and welcome to the Xtalks Food Podcast. I'm Sydney Perlmutter, Senior Food Industry Journalist and Webinar Moderator at Xtalks.com, and this week I'm joined by Vera Kovacevic. Thanks for coming today. So I've got two very food business-oriented stories to talk about, the first of which is about the Instacart IPO. So as PepsiCo positions itself at the forefront of digital advancements, the company recently declared its intention to purchase $175 million of Instacart's Series A preferred convertible stock. And this pivotal move was revealed alongside Instacart's Form S-1 filed on August 25th with the Securities and Exchange Commission, or SEC, indicating plans for its much-anticipated initial public offering, or IPO. So Instacart, which was born in 2012 with the goal of bringing the grocery sector into the digital age and redefining shopping convenience, has formed partnerships with an impressive 1,400 plus retail partners spanning over 85% of the U.S. grocery scene. And the filings gearing up for the Instacart IPO date revealed that Instacart amassed a gross transaction value, or GTV, nearing $29 billion in 2022. And the GTV reflects the product pricing displayed on Instacart, coupled with taxes, deposits, and additional regional fees. And notably, in 2022, Instacart's net income surged to $428 million, which was a sharp contrast to a $73 million loss in the previous fiscal year. The rise in 2022 also factored in a $358 million tax benefit linked to the company's valuation adjustments on deferred tax assets within the U.S. So the buzz around the Instacart IPO date has coincided with PepsiCo's endeavors to expand its digital horizon. Raymond L. LaGuardia, the chairman and CEO of PepsiCo, delved into this strategy during a July 13th conference, highlighting the company's vision to harness richer data by bolstering digitization and superior execution strategies. In a similar vein, during a 2022 presentation at the Consumer Analyst Group of New York's virtual conference, LaGuardia underscored PepsiCo's drive to integrate technology for growth. Articulating his vision, he said, "We'll continue to invest in people and technology and build advantaged omnichannel data and analytics and consumer insights capabilities, while also making targeted IT investments to modernize and harmonize our systems." And in parallel, as the Instacart IPO date nears, the company's SEC filing emphasizes a dedication to investments with a long-term vision. Every decision we make as a company stems from a fundamental belief that, in order to succeed, we need to work together across the entire grocery industry, supporting retailers and brand partners, giving consumers an affordable, accessible, and personalized experience they can't find anywhere else, and creating flexible earnings opportunities for shoppers, Instacart said in its SEC filing. Instacart further elaborated on 9 value pillars that it extends to brands, including return on investment, or ROI, targeting high-intent customers, swift actionability, and beyond. CPG brands are seeking more opportunities to connect digital advertising investments directly to sales impact, Instacart said. Instacart ads offer CPG brands an opportunity to move products off of store shelves as a direct result of their ads on Instacart. We help them advertise their products in a way that can enable an immediate purchase that can be delivered to the customer within hours or even minutes. The real-time nature of purchase and consumption allows brands to optimize their targeting and messaging to achieve compelling returns on investment. With the Instacart IPO date looming, the strategic moves by both PepsiCo and Instacart stand as a testament to their commitment to shaping the digital trajectory of the grocery sector. So I just talked a lot of business here, but I want to know, Vera, what you think about Instacart just as a whole. Obviously, it experienced a huge surge, during the height of the pandemic when people were less inclined to be in grocery stores, and they experienced a bit of a loss in 2021, but bounced back greatly last year in 2022, while the pandemic was kind of coming a little bit to an end. So do you think that it will continue to grow despite not, the pandemic is essentially over. So do you think that it's still like a worthwhile investment on Pepsi's end?
Yeah, well, I was actually very surprised to hear that it bounced back in 2022. I wonder why that is, because I thought it was going to just plummet after COVID. COVID was pretty much over last year and people were going shopping by themselves. I wonder if it's just like a convenience factor now?
Yeah, it must be. I mean, I think once you get people onto something, I'd imagine it was being used quite often during COVID, and then maybe the following year, not as much because people were like, okay, now I can do my groceries and not be as nervous about it. And then, there are rainy days or just some days where you don't want to leave the house and you're like, oh yeah, I used Instacart a lot during COVID. It still exists. I can continue to use it. I'd imagine that it's not as, it's used a little less frequently. They've also expanded beyond groceries as well. They can deliver, a lot of other things as well from other stores. So maybe that's helped them grow as well. And they've also, they have so many partnerships with retailers and they're able to advertise for specific products on behalf of those retailers. So I think they've really stepped up their game as well. And they've really expanded what they're able to do. So that's my take on it.
Yeah, probably they must have brought in some new leadership or some new ideas to really expand on the offerings and on their revenue streams. And perhaps that's why they did really well last year. But yeah, I've heard a lot about Instacart during COVID. I've never used it myself, but I imagine it saves people a lot of time because they don't have to go to grocery shopping themselves. And, time is money for people. So I think, just thinking sometimes going to the grocery store takes off half of your day in the weekend, right? So yeah, I can imagine it's super convenient to have other people do it for you. And just like the Instacart ads that you were talking about, helps people explore new products that maybe they wouldn't really pay attention to in the grocery store. So overall, I'm really surprised that the company is doing quite well. I think it's surprising to me because I just thought they were a fad, but it seems like they're here to stay.
Yeah, it really is a much different way to, quote unquote, do groceries because you are getting these ads. Maybe you're getting recipe ideas from the app as well. And you're like, oh, okay, maybe I'll try this. Whereas if you go to the grocery store, it's just you and you're making your own decisions. So I'd imagine that people often will go on Instacart and not, they'll buy what they intended to buy and potentially even more because they get ads for sales or whatever. And you can kind of scale the whole grocery store on an app as opposed to being there in person. So yeah, I think it's a huge convenience factor. As for money, I think you're going to be shelling out a little bit more because you've got those service and delivery fees or whatever. But often people will, are inclined to spend that if it'll cut them down time. And in terms of the IPO, we talked about this last year. This was a sort of a much anticipated IPO. It had already delayed plans to go public in 2021 to focus on its digital marketing business. So this has been a very highly anticipated IPO. So when it finally does, go public, it's going to be pretty huge. And this was, I wrote about this last year on the list of companies that are expected to go public in 2022, along with Impossible Foods and Chobani. But maybe it really will happen this year. So we'll definitely be looking out for that. So in other food business news, on Monday of this week, the J.M. Smucker company, otherwise known as Smucker, announced its agreement to acquire Hostess brands for a substantial $5.6 billion, which includes debt. So the move brings together two of America's prominent snack manufacturers. So who owns Hostess brands now? It is Smucker. The Hostess transaction is valued at roughly $4.6 billion when excluding the debt, when Jif peanut butter producer Smucker agreeing to pay Hostess shareholders a sum of $34.25 per share. Reflecting a 54% premium since Reuters first reported on the potential sale, the cash and stock proposition stands as a lucrative deal for shareholders. Hostess's stock experienced a 27% surge post the sale report and climbed to $33.49 a share, which is a 19% increase in the early trading sessions of Monday. And conversely, though, Smucker's share dipped by 7%, with investors seemingly finding the deal to be a bit on the steeper side. So when is the transaction set to conclude? Well, the acquisition, set to finalize in Smucker's current fiscal year's third quarter, equates to an adjusted EBITDA, which is earnings before interest, taxes, depreciation, and amortization, multiple of approximately 17.2 times based on Smucker's projections of Hostess Brands' 2023 outcomes. And for context, Campbell's Soup recent acquisition of Sovos Brands, the maker of Rouse sauce, was pegged at an adjusted EBITDA multiple of 14.6 times, considering run rate savings, and 19.8 times without. Smucker's investment in Hostess comes at a time when significant U.S. packaged foods companies are on the hunt to broaden their brand collections, especially as the financial windfalls from the pandemic era begin to ebb. Who owns Hostess Brands is a question reflecting the broader trend of mergers and acquisitions in the industry, particularly as brands seek reinvention post-pandemic. So who owns Hostess Brands after its financial ups and downs? Well, the brand turned it into an acquisition hotspot when its price hikes augmented revenues, but simultaneously sparked concerns among investors due to its dwindling volume growth. The union of Smucker and Hostess is just a chapter in the larger narrative of recent mergers in the sector, with noteworthy mentions like Campbell's Soup, as I was mentioning, the $2.7 billion venture with Sovos Brands, and Unilever's acquisition of the premium frozen yogurt brand Yasso in North America. So let me talk about Hostess's sort of turbulent history. So it was established in 1930 in Lenexa, Kansas, and it stands as the proud creator of iconic brands such as Twinkies, Ho-Ho's, Ding Dong, Zingers, and Voortman cookies and wafers. The alliance with Smucker is a significant turning point for Hostess, which has previously faced bankruptcy, both in 2004 and 2012. The reasons ranged from excessive debt incurred by private equity owners to a lack of innovative snacking options. In a transformative move, entrepreneur Dean Metropolis collaborated with the private equity corporation Apollo Global Management Inc. and reintroduced Hostess to the stock market in 2016. This was facilitated through an arrangement with a special purpose acquisition company supported by the private equity group spearheaded by Alec Gores. Fast forward to a couple years ago in 2020, Hostess had not only rejuvenated its portfolio, but was also registering revenues exceeding $1 billion. This marked a crucial juncture in its revival journey. And as for its financial strategy, the brand sometimes hiked prices to maintain revenue growth, especially when sales volumes dwindled. Meanwhile, Smucker, a brand known for its coffee and pet food divisions, boasts a market cap surpassing $13 billion. The company also recently escalated prices of its jams and jellies, contributing to an optimistic profit outlook for the year. And as the dust settles on this significant acquisition, the recurring question of who owns Hostess Brands now finds its answer in the J.M. Smucker company. So I thought this was quite, a big or, pretty expensive acquisition. And I don't think I was the only one that thought that. And given sort of the turbulent history of Hostess and given that it's gone into bankruptcy twice already, are you a little bit more optimistic this time now that it was purchased by, a very well-known and big food company? Or do you think it risks bankruptcy again?
Well, I definitely think it depends on why it almost went bankrupt. So you mentioned, you did mention why. You said it was, the reasons ranged from excessive debt incurred by private equity owners to a lack of innovative snacking options. Okay, well, I definitely think that the acquisition is going to help them with both of these things. So I don't see them going bankrupt again anytime soon, if they learned their lessons from before, right? And if they're constantly innovating and bringing out new products that like gain popularity, yeah, I think it shows a lot of promise. But what's interesting to me, like I don't recognize the Hostess label at all.
Really?
It's such a big company. Yeah.
You'd never heard, but you've heard of Twinkies?
No.
Really?
Yeah.
Okay. So Twinkies, I would say Twinkies are the biggest a product of the entire Hostess brand. They're sort of an iconic like snack cake. As you can see from the picture, I mean, most of Hostess's products are, sugary treats. And Twinkies sort of got this reputation for, whether it's true or not, for lasting forever. They were, even though I believe they certainly have an expiration date, I think they were sort of, they were the food that people were like, oh, if there's ever a nuclear war, that's okay. Like Twinkies are going to survive. Like, and I think that kind of derives from the fact that they're so full of chemicals and preservatives that they never go bad. Although I don't think that's true. I mean, you could say that about kind of any other snack in the same category. But yeah, certainly Twinkies are a very like nostalgic snack for a lot of people. They've been around for so long. And same thing with a lot of their other products as well. But I think what Hostess is relying on the most here and what's sort of brought them back to life on multiple occasions is that nostalgia factor and the fact that, because I do remember actually when they went bankrupt for the second time in 2012 and how sad people were that Twinkies would be gone essentially. But they were ultimately brought back, I think, by just the demand for them. But yeah, that's a little bit of a rundown on Twinkies.
Wow. And what do you think about the $5.6 billion deal? Do you think that's, or, the $34.25 per share? Do you think that's like a premium?
Seems steep, to be honest with you. It seems very expensive. But, I don't want to say what do I know, but I'm just trying to think of, other acquisitions of like a similar caliber, and it does feel a little bit steep to me, and I think some other investors probably felt the same way. But I mean, Smucker has the money to spend. They've been doing really well. I think last year I wrote about why one of their most popular products, Uncrustables, was doing so well. I think they just have a really good knack for popular and sort of timeless products. So I'm not like surprised that they purchased Hostess. And I agree. I think that this is a really good acquisition for Hostess as well. And I think, I don't think they'll face bankruptcy again, or at least I'm crossing my fingers, because it was pretty big news. And to go through bankruptcy twice and to still be around, I got to give it to them. Yeah,
they know what to do when they're in trouble, I guess. But I wanted to ask you about the acquisition details, right? When, you said that it equates to an adjusted EBITDA, and you said it was a multiple of approximately 17.2 times. Just wondering, like, generally speaking, like, what does that mean? Like, is that number significant?
Okay, so to answer your question, EBITDA is essentially professionals use it. They use reported. Finance professionals can use details reported on annual finance statements to determine a company's profitability using this equation. And it looks at how much money a company makes before expensing taxes and interests without considering the depreciation of assets. So it's often used in, investment banking, and of course, and in this case, mergers and acquisitions, and analysts may use it to compare two companies or investment options. So Yeah, that is essentially what that means. And obviously, and I mentioned that, another acquisition had a lower EBITDA of 14.6 times, and this one was a little bit higher. So
I guess that's one of the reasons why Smucker decided Hostess would be a good company to acquire.
I think so. Yeah, I believe so.
Yeah. Interesting. And Sydney, the Hostess products, they're available in Canada?
I believe they are. Let me
because
actually
you seem to know a lot about the Twinkies.
I do, even though I maybe have had one once in my life. Yes, they are available in Canada. I believe they're sort of more like you can find them at Walmart and other grocery stores, but I think where they shine the most is in convenience stores or gas stations with other like snack cakes and whatnot. But yeah, they're available in Canada. I think they're a relatively like international brand. They've had a lot of different adaptations, you could say. I believe there was like a Twinkies cereal, and there's like Twinkies flavored coffee creamers and things like that. So the Twinkie brand and flavor has been adapted into multiple different products, and it's they've been around for quite some time.
Yeah, interesting.
In fact, they've been around since the company started in 1930. So they've released almost 100 years of Twinkies with a couple breaks in between, but too old to go anywhere.
Yeah. So and even of course with the acquisition, they're still going to maintain the same like product names and packaging.
Oh, I believe so. Yeah, I believe so. I think that would be a mistake on Smucker's part if they changed that or messed with it or even changed the formula or recipes or anything like that. I think they're definitely going to stay the same. Yeah. All right. Well, that's the end of this episode of the Xtalks Food Podcast. If you like today's show, don't forget to rate, review, and subscribe. Thanks, everyone, and see you next week. Bye.
Bye.
Thanks for listening to the Xtalks Food Industry Podcast. If you enjoyed our discussions today, please share the episode with your friends and colleagues, and be sure to subscribe in order to be notified when a new episode is released. To join in on the discussion, you can find Xtalks on social media, email podcast@xtalks.com, or comment on the articles directly. Links are in the show description. Take a moment to join our community at xtalks.com to get access to everything we have to offer, including webinars, job listings, virtual meetings, articles, and more. The views and opinions expressed in the podcast are those of the speakers sharing them. They should not be taken as professional advice and do not necessarily reflect the policy or position Honeycomb Worldwide. For further information, email us at podcast@xtalks.com. Thanks for joining us, and we'll see you next week.